Well, let's now get across the market open and what we've seen on global markets overnight. Joining us, Greg Boland from Tiger Brokers. Greg, welcome back. Good to see you. Let's start on Wall Street. And now, of course, we did have earnings season getting underway. Just before we get to that, big story being Nvidia, which looks as though it's got approval to again begin selling its AI chip into China.
Yes, the CEO came out with an announcement yesterday mid-afternoon, Australian time, basically saying that they seem to have approval to resume shipments of their H20 chips to China. He used the word soon, but whatever soon means is still debatable. So Nvidia at the time rallied straight away in the 24-hour market and the after-hours market, and rose another 4% during the main session this morning to close at a valuation of about 4.17 trillion after getting to 4 trillion last week. So up another amazing amount of money in terms of a rise in the stock price. It sort of also drew along super micro and advanced micro devices, which were also up well over 6%.
Yeah, so obviously beneficial as far as the Nasdaq was concerned. That reached another record high as a result of those moves. Elsewhere, Greg, the focus, as I said, was on the latest earnings. We got the JPMorgan among those, Wells Fargo and Citi. Interesting, they all had positive results, but a bit of a mixed response there on the market.
Well, I think it was a funny session because the market opened high and then got sold off on so the results came out before the bell or before the open, and also right at the open the inflation numbers came out, and the inflation numbers were probably a little bit worse than what people were expecting, and so therefore the whole market got sold off, and the banks sort of took the brunt of some of that fall. There was a mixed bag of results. BlackRock, JPMorgan and Wells Fargo all fell. BlackRock and Wells Fargo by more than 5%, whereas JPMorgan was down about 0.8%. Citigroup sort of bucked the trend and rallied on its result and closed up around 3.6%. Both JPMorgan and Citi, their results were better than expected because of profitability in their trading arms, so equity trading, and also their fixed interest commodities and currency trading, and also the investment bankers did pretty well. And Citigroup, for example, were involved with 7 out of the top 10 M&A deals for the quarter. So the traders and also the investment bankers helped buoy JPMorgan and Citi in terms of their results.
Now, and tomorrow then we get results also from Bank of America, Morgan Stanley, Goldman Sachs. Look, others as well, including we're getting Johnson & Johnson this week, as well as Netflix. What are you looking for? Any particular highlights?
I think it'll be interesting to see whether Bank of America and Morgan Stanley and Goldman sort of can mirror the results from Citi and JP Morgan, as opposed to the sort of tepid result from Wells Fargo. So that'll be interesting. Johnson & Johnson and United Airlines both report. It's interesting that in the Dow, Boeing is one of is a leader for the year-to-date figures. So be interesting to see whether United Airlines can get buoyed along with that. Netflix and Pepsi on Friday, and American Express and 3M on Saturday are the key results. Expectations overall for these results or the earnings season has been lower than before. The S&P is projected to post a blended earnings growth rate of 4.3% on a year-on-year basis, according to FactSet data. But this would be the lowest growth rate for the index going back to the fourth quarter of 2023. So expectations are not high, and definitely there's been mixed results in that first batch this morning.
Greg, there was also a focus on the latest inflation data out of the States, with evidence that those tariffs are starting to flow into those price rises.
Yes, definitely that was the key driver for the whole market today was the inflation data came in, I suppose, a little bit higher than forecast, particularly in the actual inflation rate year on year. The forecast was 2.6% and the actual was 2.7%. So a little bit worse than thought, and as a result, Treasury bond yields rose, and the 20 and 30-year bond yields both went through 5% on the upside, with the tariffs blamed for the rise in inflation to its highest level in 4 months. It also stymied the idea of a Fed rate cut in a couple of weeks' time in the July meeting. That percentage chance or probability has fallen to 2% from 23% a month ago. And the Fed governors have been speaking after hours as well, and they continue to with their "we're in no rush" and very cautious rhetoric, even amid Trump's rumblings that Powell has to go and that he's looking for a successor when his term comes up at the end of May 2026.
Greg, Donald Trump does appear to be making some headway in terms of striking deals. We do have news that he's apparently struck a deal with Indonesia. I think it's at a tariff rate of 19%. No tariffs, though reciprocal from Indonesia on US exports. What are you seeing on the tariff front? I guess we're still awaiting news, a confirmation of where tariffs are going to land for Australia.
Yeah, I think there's been a continual flip-flop, and Forbes have come out and said there's been 28 different changes in the tariffs since Liberation Day, but the tariffs are starting to bite. And a Yale study has stated that the average effective tariff rate is 16.6%, up from the 2.5% at inauguration. So it's definitely starting to bite. What we do know is that a universal 10% tariff is in place. 50% tariffs on aluminium and steel, and also on various cars and car parts around 25%. For Australia, the hit is really a little bit more limited. The exports to the US are only 6% of total exports. Specific sectors like steel and aluminium and auto parts may face some sharp, tariff increases, but broader trade shifts might open, niches for resources and agriculture to look at other markets, especially if Australia remains non-retaliatory and benefits from redirected capital flows that, would have gone into the US from other markets and maybe into Australian goods and services instead.
Yeah, what's your view, particularly on the bigger miners? And that also comes in the wake of that data dump we got from China yesterday as well, and the likely demand we're going to get for some of our key exports.
Sorry, could you repeat that? Sorry.
I was just wondering what your outlook is for the bigger miners, particularly in the wake of that data we got out of China yesterday.
Yeah, so definitely the miners are not as affected as badly as thought. The BHP and Rio Tinto's the tariff effect is a bit more minimal, and the Chinese support for resources, particularly from Australia and the like, will definitely help offset the tariff issues globally.